You're listening to the Real Talk Real Estate Show with your host, Clayton Hepler.
Today's guest is a good friend of mine, Chris Jackson, the tech investor. His experience in real estate spans from having over 300 units, multifamily units in the Southeast, to having experiences with flipping single-family renters and wholesaling. He was a former tech executive focusing on the legal industry turned a multifamily maven. And he's also an avid birdwatcher and a snowboarder. Please join me in welcoming the multidisciplinary Chris Jackson to the Real Talk Real Estate Investing podcast.
So you end up hiding behind more analytical pieces, mistaking it for the right work, really at the wrong time. So then you wonder, why don't I have my pipeline? Why isn't this working? And what one should have been doing is building more of maybe a framework, a foundation for the people part of this business, which is so important, of relationship building, experience building, broker relationship building, and just the art of that part of the craft, as opposed to the systems, which is amazing and so important. But I think it's a little bit of a crutch, and it ends up being a place that I know I hid behind.
Yeah, I actually remember listening to a conversation in which you stated that one of the biggest learning curves for you was that relationship building aspect of real estate. Tell us a little bit about, maybe give us the context behind that what you were saying about relationship building. And I want to just contextualize this even more and say that there's a lot of people that say, I want to send out, mailers and do all those things. And and also like take brokers out and talk to brokers. And I heard that the only way to build a relationship with a broker is it's just to seal a deal. It's a closed deal.
Well, I agree with that. Like your next level of relationship gets very serious after that. You do have to get to a deal.
Mm-hmm.
But I do agree with that you should be working towards getting a deal. I think for me, being an introvert, which was tough for a very long time because I was a computer programmer, hiding behind the computer, knowing deep inside that there was something more that I could offer, and that I had more than just the analytics of all this. I had to go on a journey to build my relationship building skills, which took a fair amount of time. But I was gradual in that, and then I realized that I had some skill sets that I could build more of a foundation of relationship and make that my actual superpower. I didn't know that it was my superpower. Relationship building, I would have not thought was my superpower, because I was hiding behind fear and introversion to do something else that I'm quite good at, which is analytical thinking, engineering. I became a partner at a tech company, but really I was a hardcore computer programmer for 10 years.
Wow.
But I knew that I had something more to give, and those relationship building skills were the area that I really started to flourish. And I do think that, sending out mailers is awesome. What I can tell you happened to me that I think happens to a lot of people is you end up going to spend money, you download a list, you start filtering, you think you're doing all this amazing stuff with data filtering, you go send out a mailer, and then guess what happens? People call, and you know what happens? You don't really talk to them. You don't really call them back, and you stink on the phone. And then you're like, wow, maybe I'm not good at this part. And you can go into a negative spiral of that piece. So you didn't build the right foundation to take advantage of the effort that you put into marketing.
Let's talk about foundation. Tell us a little bit about how you got into multifamily investing, and maybe don't speak to what you normally say is your 30 seconds of Chris. Would love to learn about what your foundation is and why you're investing in multifamily real estate.
I'll give you something different, because it was what I was born to do. I know it was. I was 21 years old, and I always wanted to get involved with real estate investing. I did I'm a bit older. I'm 44, so some people might remember it, but it's like Carlton Sheets, CDs, things like that, VHSs. You could get like lease option stuff, and I always had this. There was just something calling me to it, and for 10 years, I really didn't do much with it, and I feel like I never took action. So I wanted to be a real estate investor. I wanted to be a developer or just be involved as a real estate investor. And I just didn't have the courage to take action. I did a lot of analysis paralysis, bull crap.
Mm-hmm.
And for 10 years, I sort of like, man, I really didn't do much. I mean, 22 to 32, I was dreaming about being a real estate investor. How sad, you know? And then at 32, I just decided, I was a computer programmer at the time, becoming more of a partner at a company. And I just said, you're not allowed to think about real estate investing anymore unless you take action. I literally said to myself, I could not look at my wife and say, I'm talking about this anymore if I don't take action. So I did. Now I'm starting to get into like the same thing you hear, but it's my journey. I hired a local mentor. And I got my first deal a year later because I did that, a 5-unit.
Hey, I resonate with that. My girlfriend partner I care for very deeply is another kind of spark plug for me in starting my multifamily journey. Take us a little bit to that. Well, maybe a little bit fast forward, but along the same context that we're speaking in right now. What are your highest impact activities? There's a lot of floundering at first, mistaking motion for action, moving around, especially for a new aspiring investor, which is the majority of our listener base. Talk to that a little bit.
I'll give you 2 answers. Do you want the answer Chris Jackson today? Because Chris Jackson today is a different Chris Jackson than when I was beginning. So my highest impact activity would be different. My highest impact activity today is creating and maintaining momentum by marketing, branding myself, and that is in all of its forms of finding new brokers, broker relationships, hustling phone calls, getting on the phone, investor calls. It's just creating momentum. Momentum is so powerful. So that is my highest impact activity is inertia, action, phone calls to brokers, investors, and branding, so that there is a pipeline of energy coming my way that I must respond to.
And maybe take us to the first, the infancy of your business.
I would say that the highest impact activity when I look back, now that I can look back and understand mistakes that I made, where it really made a difference, highest impact activity would be, I didn't process 2 things. I didn't process enough deals. And I didn't, because I needed to get better at understanding what the matrix code looked like for a deal very quickly. I wish I'd processed more deals, a lot more, just heavy into processing deals, learning it. And then secondly, I did do this, but people don't do it. My highest impact activity when I started out, it changed my life, was I began to network heavily.
And networking in the perspective of going to meetups, talking to people. I understand too, Chris, that on your first deal you raised money. Is that correct?
Yeah, my first deal, my 5-unit, I raised from a very difficult investor. Took me a year to get this investor onto my team and paradigm of thinking and changing. That was my mom.
Oh,
Took a year. A year of convincing, changing the paradigm of your family to understand that this is where you're going next, risk mitigation. So I don't come from a wealthy family, so anybody that goes insta negative, my mom is a retired school secretary. My dad passed away a while ago, so it's not something easy. So I had to show that I knew what I was doing and that this was something to take a leap on.
I love the concept of career capital, Chris, and Cal Newport actually speaks to this. And there's a lot of people, gurus that you hear nowadays saying that, you can go in and buy your first 100 units, no money down, or raise the money. is raising the money as easy as people say it is? Do you recommend raising money on your first deal? And how can your experience with owning a couple hundred units speak to that process and building that career capital?
So equity is abundant right now. So I can't say don't do that because equity is abundant right now. So that is maybe a quicker path, a path of least resistance in the current market cycle. However, you're asking an operator. I am an operator. I find deals. My business partner and I, Krista, raise capital, but we are operators. So for me, it would be difficult for me to be able to raise at the level that we can now without having the absolute confidence to be the operator. So
Right.
when I hear people career capital, I understand how it's working. It's just that I would like more of them to be placing more scrutiny on their ability to vet sponsors, because the capital raiser most of the time doesn't have as much operational control as maybe one should when your fiduciary responsibility is the investors you brought to the table.
Right. Okay. That's a great answer, because it's like it should be. It's circumstantial. Even though equity is abundant, you should have that operator mindset and understand that you are really you have a fiduciary responsibility. You're a steward of someone's wealth.
Yeah, I mean the people. So there are very good equity raisers, and they are vetting. There are some that are vetting sponsors and have a successful track record with sponsors, and the investors that are working with that capital raising entity or person trust that person because they place their money correctly and they're doing it's just right now, I think it is easy just to say, get into the big sexy of big door multifamily, and I'm not really vetting the sponsor, and let's just go do this and let's go say how many doors we have, and isn't that awesome, and we sound super cool at parties.
Don't we all want to do that? What's your unfair advantage right now, Chris?
My unfair advantage is actually patience, which is surprising given where we are in the marketplace. It's we still find deals. I mean, every syndicator is going to say this, so it's not going to sound so amazing, but it's I'm actually not a patient person. To hustle and find deals, you have to almost not be patient. You have to be out there like pushing hard. But man, like there's a ton of deals that I look back to 2 years ago and I'm saying, I wish I had done that. But I feel really good about our patience when deals come through our desk that I think are very easy to get artistic with a pro forma, and we say no and we lose them.
I love that. Get artistic with the pro forma. That I've heard that you want to try your best. I mean, you want to try your best to kill the deal. You want to kill it, because if it can survive, there's a lot to speak about spreadsheet magic. If it were to survive, then you got a good deal. You got a deal that's going to hold up in maybe the market correction a year or two, and now you have something that's going to be able to handle that. So how are you evaluating your deals? Kind of what markets are you looking in currently?
We're expanding now. We actually, I'm a big fan of Brian Burke. So I like the organic growth piece. We went into Georgia. We have some stuff in upstate New York. That's where I got my start. Then we started to expand down in Atlanta area, and we've done a few full cycle projects. Like we have 5 full cycle multifamily projects from completion, raise, reposition, sell over the last 6 years. So we've been through that, but we didn't grow outward. I was seduced to go into other markets, but we didn't end up going there, like Carolinas. Didn't go there and really learned our craft in the Atlanta, Georgia market. That allowed us to expand into the Augusta market that we like. We purchased in Augusta just this year. We're looking at more. I like the concentric circles outward of the Atlanta metro. I'm bullish on Georgia as a whole in many areas because we've reached a point now. We're in a different arc of our business. I can say I'm cool with expanding. We're looking at Charlotte area, just the high growth centers. We understand that we show up and nobody knows who we are, so we don't have a competitive edge. But we know now that we can take down a bigger property with institutional level asset management, and we can do well in a new market. We know how to vet it, and we're patient with it. I'm not looking to go into a new market and tear it up in 3 months.
What's your business plan for the next 12 months?
The business plan for the next 12 months is to expand into new areas. We would like to pick up something in the Carolinas. I would also look in some areas of central PA. I like certain areas over there. It would have to be a special project. It's closer to me. That allows us to possibly implement maybe a self-managed opportunity if it presents itself, if the project was large enough, because it would be close to us geographically for us to develop a team, but that would have to be a special project. So it's mainly geographic expansion is our 12-month plan.
And what brought you into, so, you hear about all these, you spoke about Carlton Sheets, and then you kind of got into the mindset, oh, I'm 32, I want to do this, I want to get into real estate. What drives you to real estate? And you said quite profoundly that it's what you were born to do. Why multifamily real estate also? So
inside, it was first real estate because that was just I didn't know any better. It was Carlton Sheets. Like, this is what you do as a real estate investor. I would say I know no other asset class that allows the everyman to learn the craft to be able to control value at the level that real estate investing, multifamily, does, so that you can create wealth for yourself. There are other assets out there, but I don't know any others that are have such high demand, and the everyman can spend time learning the paradigm of finance, management, asset management, partnership. All these things are available to us, and you don't need special degrees, and it allows you to take over control of your destiny.
Wow, that's incredibly well said. And I know that just from my personal experience, Chris, I'm looking at it from the perspective of I want to help people that I care about, I love. I want to grow my financial legacy, and multifamily real estate seems like the everyday man. I love that, the vehicle for wealth, because of the American tax code favors real estate, especially bigger multifamily real estate. What kind of, along the same lines, what have you learned from your experience in tech that allows you to kind of take that into real estate? And I want to say that it seems to me like tech is playing more and more of a role in real estate, in the people that are sleeping on the sidelines and not thinking of implementing artificial intelligence in tech. There's applications like Anolo that help you with underwriting and in different types of data-driven services and software. Are there any that you're using, or what are you bullish on tech and real estate? I'd love to learn a little bit more about that.
Super bullish on tech and real estate. It's unbelievable to me that you look at the level of asset size that we're talking about. I mean, you're talking about sometimes $20-40 million assets run by maybe older companies that their basis is very low, and they're not running the properties very well. And there's a lot of paper still. There's a lot of just intuition and process follow-up. And it lends itself to being limited to maybe the people with the most knowledge of the process. Whereas with tech, when you start to put the tech processes in a medium like the internet, the cloud, to do management, you can have more people manage the process without the high level of training. So you can offload certain segments now in the process management of all of the various disciplines of multifamily that aren't getting paid attention to, especially in asset management. Like, we can talk about the big sexy stuff of finding deals. That's great. Big high five. You found a great deal from your super tech. But if you don't know how to manage the deal, who cares? Like, so you have like your marketing for your tenants, that all of these can use new tech. And some of this I'm just not going to go into because that's my edge. But like, as far as disciplines go, you have marketing for tenants, you have delinquency management, you have reputation management, you have renewal management, you have community management, and then you have basically asset management too, with your management of third-party management, if you so do that. So you have all these disciplines that can use a lot of different types of process tech, like Trello, Asana, if you wish. Just managing just the large numbers of things that you have to track in a way that maybe 10 years ago I think would be too much. You need more people to track everything. And now you can do brain dumps in a categorized way and move things through categories where high level, like the partners of our company can look at a lot of information very quickly and understand where they're moving through the process.
Do you see tech disrupting what we know of real estate now? And let me get a little bit straighter on that. You're seeing more and more in these bigger markets. See, I'm in the Pittsburgh market, and the Pittsburgh market. You look at the effect of the Great Recession on the Pittsburgh market. No big deal. We weren't hit that poorly. We're a slower market, although we do have a lot of tech jobs coming in and a pretty raising millennial population. We're not affected like a Denver that has micro housing and those little baby apartments. Are you familiar with anything on that? Are you still focusing in on the kind of Class B, Class C value adds?
We are.
Okay.
I think workforce housing is still an area that I think has been neglected, from the proper types of rehab to the units. There's still opportunity there, although everybody kind of knows the C-class value add space. I do think that I don't see tech isn't influencing this, but our focus is leaning towards a flight to quality. And that doesn't necessarily have to mean B class tenant, but we are starting to look at 1980s and newer. And that is because we're seeing a lot of CapEx that is needed for the pre-1980s buildings not being taken care of in the value add business models. A lot of owners are going in, they're redoing the units to get the rents up, but they're not taking care of some of the big nasties, like roofs, windows, ACs, underground piping. So all this stuff is showing up and kind of being neglected until the music stops for the next person. So as far as tech goes, I actually think tech can be used to help you understand some of the bigger CapEx nasties, and you will win. Like, we actually, if the deal works for a pre-1980, or say we're buying a 1960s, we'll go in there and put main shutoff valves for every single building and redo the underground piping so that you have PVC now instead of galvanized, so that your NOIs aren't going crazy and leaks are showing up, and you just lost your ability to go sell to the next investor. Your next investor is going to show up and not care that you raised rents 150 when they've got a $200,000 underground piping and NOI fluctuation problem that they can't solve. If you go revitalize 1960 building, 1967 building, and serve up to the next investor, PVC pipes that are going to last 50 to 100 years underneath the mainline pipes. I'm not talking about unit pipes. You have served up a premium product. So tech, from building technologies, maybe water flow, understanding are there water leaks on the main lines. Tech in the big CapEx stuff is going to start showing up more.
I love that. So we're running out of time on our end. Really been enjoying this interview, Chris, but I'd love to get into our real talk fire round.
Okay.
Let's what's your number one real estate book, or it doesn't have to be real estate, could be business, could be maybe something a little bit alternative,
Yeah.
that maybe it's not Rich Dad Poor Dad, please.
I'll give you it's not going to be a real estate book. It's going to be, I forget the authors, but you can look it up on Amazon. It's called The Charisma Myth.
Ooh.
So yeah, it's about the art of personal magnetism, and I think it is a more tactical approach for people to develop influence and become more interesting and ask the right questions so that you can develop deeper, more authentic relationships faster. And there's a big myth out there when you're an introvert that like the big sales people that are shaking hands and controlling a room have something that you don't, and really it's actually more of a tactical art. So
Wow.
the myth really helped me.
Would you mind sharing one or two quick action items? Maybe just one.
Yeah, you can, like one of the things when you go to a networking event that I always do is I ask somebody how I can help them. So when you're talking with somebody, say, oh, how can I help? Like if you ask them about what they do and you start developing rapport, you can say, oh, how can I help? What are you looking for help? Like like if I brought a new client to you, like what would that look like? And you just have a better conversation with them and they remember you. Mm-hmm. And I ask a ton of questions. Like I could be talking to somebody and they never ask me a thing about me. I'm asking them a ton of questions and they'll end up saying, wow, it's such a great conversation. And then they don't know
talking about myself.
Yeah, they don't know.
I'm with that. So what are some, Chris, maybe you don't have any limiting beliefs, but what are some of your limiting beliefs maybe in real estate when you started out?
The limiting belief, yeah, sure, I did, was that it was for other people. No, it wasn't smart enough. Like, didn't have the right connections. Wasn't really for me. Like maybe some of the roadblocks I'm hitting is because I'm proving that those other people have the right pedigree. They're more extroverted. They went on a path of sales that I should have gone. And if I had listened to those voices, I wouldn't be here where I am today.
We wouldn't be talking, having a great conversation. What drives you to keep investing?
What drives to keep investing? It's
investing in growing yourself and building your company.
Oh, it's fulfillment, purpose. I know this is what I was meant to do. I'm achieving my dream right now. I've worked 20 years to get here. So I'm loving every minute of it, every bit of the peaks and valleys of the sine wave that goes upward.
I love it. I love it. What's been your biggest challenge in real estate, and how have you learned from it?
The biggest challenge in real estate currently, it would be the management of my patients. That is giving me an edge, but that is what I work at daily, to manage my patients, because deals are getting more difficult to find. And then you must manage the shiny object syndrome, which is going into everything else in every other asset class. You have to be at a certain place in your career before you can really jump ship and start looking at other things. Would I look at a self-storage facility right now? Yes, but I've been doing this for 10 years. I would tell somebody else in a different arc of their growth to not do that.
Love that. Before I ask my last question, where can our listeners get more value? Maybe get in a conversation with you that you ask them, how can you help them?
Oh, well, I'm going to a lot of these events now. I'm fairly active on Facebook. You can go to my website, Sharpline Equity, fill out the contact form. I reach out. You can connect with me on Facebook. And we also have a private group called Multifamily Unveiled that we post things that we find high value. It's not a pitch fest. We're not offering anything other than musings and what we're thinking through and some challenges that we've had in multifamily. So there's a lot of different places to reach me. You can reach me on LinkedIn as well.
What's your real talk best habit as a real estate investor?
Oh, I love this. It's become a habit. I had a bad habit, but now it's become a good habit. Optimism. I've spent 10 years to get into a habit of being optimistic. And that changes the framework by which you attack your day, how you talk to people, how you work through problems, and how you see the world. So my habit was negativity. I didn't come from a place of family influence of being positive. I had to learn it. And now I do actually have a forced habit of being optimistic.
Wow. Chris, thank you so much for your time. I'm really wish it could be a little longer, but we're coming to the end of our cycle. I'm going to put all these show notes in. I'm going to put down where to reach them, guys. I think that one of the biggest thing that you should be asking yourself after this is, are you having enough patience? Thank you so much, Chris.
Yes, thank you.